Hello, fellow Rebel Capitalists. Hope you're well. For once, we've got nothing to talk about, Josh. Absolutely nothing happened today that's newsworthy. Josh has got to put his shirt on because he's there with his ladies.
I'm eating some lean ground chicken right now, George.
Just swiping through his Tinder account. Oh, no, I forgot you have a manager for that. Excuse me. Now, guys, this is one of the most remarkable days in stock market history. And I am not using hyperbole. We saw things today that we have completely never even remotely close to have seen before. So on that note, let's dive right in and check out what happened on this roller coaster ride. We're going to go straight over to CNBC. Trump temporarily drops tariffs to 10% for most countries and hits China with 125%. Now, if you somehow were at work or you didn't see the news, the stock market skyrocketed. In fact, not just the intraday move, but I think the move up was set a whole new record, even in percentage terms, in the NASDAQ. And look, I got to give myself a pat on the back here. You guys that watch my videos, you know that I've been talking about that. What was my base case, Josh? My base case is that the market would go down, and that Trump would come out and say, oh, sorry, kidding. Or if he did, then the stock market would just rip higher, and it probably remains higher for a while, depending on news. It's all about news flow and headlines, unfortunately. And then likely we'll get some more softening data, and the market starts focusing not so much on Trump and kind of the roller coaster ride, the Six Flags ride that we've been on the last couple of weeks or so. But then it focuses more on what's happening fundamentally in the U.S. economy, and unemployment rate goes up, whatever. We start to see the data soften because this is what the yield curve has been telling us for quite some time. And then you start to see the market kind of trend lower and lower. That was my base case. Now, the first part of it played out to perfection. We'll have to see what happens with the next part. And again, it's hard to even have any type of prediction because it's just so extreme and so volatile, and you just don't know. I mean, Trump comes out this morning and says buy shares or buy the market or whatever the hell he said, and then he announces basically he knew what he was going to do, and he's just toying with people. I kind of wonder if that's legal. I'm sure it is, because I don't know that he's profiting on this. But boy, you want to talk about just, if you don't like short sellers and you think that Americans, that it's unpatriotic to short sell, all he has to do is just say, yeah, I'm thinking about taking off the tariff. Just one tweet, and the short sellers just get completely and totally decimated. This is why, if you're a subscriber of Rebel Capitalist Pro, you know I say this all the time. If you're bearish on the market, I much prefer to play it through interest rates than to play it through the stock market itself, like buying puts on the S&P 500 or something like that. Now, that said, what happened, just like yesterday, the day prior, what happened in the bond market is almost maybe even more bizarre than what happened in the stock market. And I think that prediction, or something we've been talking about on this channel a lot lately as well, as far as the interest rates going up due to things that could be systemic versus inflation and growth, that may be playing out as well. A lot of talk in the news last night on the basis trade blowing up. And if you guys aren't watching the whiteboard videos, you should. But if you are watching those whiteboard videos, you know that I've been talking about that basis trade extensively and the risks to the entire financial system. In fact, the whiteboard video that I have tonight talks about volatility, and we talk about the basis trade, or not necessarily the basis trade specifically, but I talk about people and entities selling treasuries not because they want to, but because they have to. So anyway, we're going to talk about that in just a moment. But let's go over to the Wall Street Journal, where we get some details on this just face-ripping move higher. Really unbelievable. You just can't find a parallel. I mean, COVID, GFC.com. I mean, not even close. Not even close. NASDAQ jumps 12% on the day, and it did that within the span of 10 minutes. Dow soars 2,900 points. Holy cow. And look at this. You want to talk about a roller coaster ride? We're almost to the same levels that we were prior to Liberation Day, which I think should be called Retardation Day, but we're back almost to those levels. I mean, this oh, hopefully, and I've just been on a 2-hour live stream prior to this for a virtual conference where I was a speaker, so I haven't had time to do, pull up any charts or pull up any articles. So I'm going over this in real time with you guys. So you're seeing kind of my raw reaction, which is typically what you do. I don't think it's any secret that I don't do much preparation for these live streams. Oh boy. So we go through the timeline. Did market reaction lead to tariff pause? Oh, come on. So Lutnick is saying no. Give me a break. Come on. Come on. Come on. Come on. No matter how much you like MAGA or Trump or the tariffs or whatever, you gotta admit that the market reaction had quite a bit to do with I think the 90-day pause. Now, I think let me be clear. I think the 90-day pause is fantastic. I love the 90-day pause because, like I said this morning, the rhetoric was escalating and we were getting into, an area that I thought was quite uncomfortable. Now, I know that we're escalating still with China, which is the biggest concern there as far as obviously a hot war, what we were talking about earlier. But this tells me that Trump isn't so stubborn that he's just willing to let the whole thing burn down just in the sake or for the sake of bringing jobs back or whatever the battle cry is, that he is willing to pump the brakes a little bit. And, I think if we're just being honest here, this is Trump being forced to the negotiating table. I don't think this is, I know they're going to argue that this was all part of the 5D chess and everything. Look, if I had to bet on it, I think the response was outside of what they thought. And, Besant's a smart guy. He's a smart guy. And I'm sure he saw what was going on in the bond market. And he's like, okay, Donald, forget the stock market. That's on the side. That's a side note. What's really important is we could see liquidity dry up. And you don't want to be, on the watch. You don't want to be the guy that history remembers as causing a GFC 2.0. My guess is that had a lot to do with this reversal. But again, the good news is that Trump is willing to listen to reason, and hopefully he can still negotiate tariffs down globally, even with the 10%. We'll have to see how this plays out. But overall, I think for me, this is great news. Great news. But like I said, we're not out of the woods yet because the biggest elephant in the room here and the biggest risk is what's happening in the bond market. And I think the price action and what we saw in yields after Trump made this announcement tells you everything you need to know. We're going to get into that in just a moment. Let's go to Bloomberg and see what they're saying. Yeah, this is a great way to say it. Markets turn from fear to euphoria as Trump backpedals on tariffs. Oh, here's what he said this morning. He said it was a great time to buy. Yeah. Yeah, I think he had a little insider information there. I think what I want to write down too is just one word, I want to talk about it after we talk about the bond market, and it's uncertainty. You all know that investors hate uncertainty. No secret there. And I think for a lot of people that are in favor of tariffs, they're like, well, who cares? We don't care about what's happening in the stock market. Besant came out, he says, now it's time that we focus on Main Street and we forget about Wall Street. They've been the priority for the last 40 years. Now it's time to focus on the little guy. Okay, right. But remember what has to happen in order for the little guy to benefit. The entrepreneur, the business owner. The little guy cannot benefit. Not possible. Unless we have the entrepreneur that's willing to take risk. The business owner, the corporation, the small, mid-sized business, they have to be willing to invest in the United States. They have to be willing to bring their factory from Vietnam to the US or whatever it is. Without the cooperation of the business owners, there is going to be no manufacturing jobs. The whole, you go down the list of objectives, the stated objectives for let's just say MAGA economics. And in order to make that happen, you've got to have the corporations creating the jobs, making the investment, the capital investment, all these things. I'm not telling you guys anything you don't already know. Unfortunately, those types of investors dislike uncertainty the exact same way the stock market investors dislike uncertainty. In fact, probably more so. Because if I'm a stock market investor, I have a lot of liquidity. If I don't like the way something's happening, I can just sell. And I'm out and I've got my cash. Might have taken a haircut, but at least I got my cash. If you are a business owner and you're thinking about building a warehouse or a manufacturing plant here in the United States, you don't have any liquidity. If you spend that $1 billion to set up that factory in North Carolina, let's say, and the political winds shift or something happens, you can't just sell because there's a bid on your Bloomberg terminal or your Schwab account or something like that. So they're even more, I would say, uncertainty averse than the investors in the stock market. So if you are kind of on board with the MAGA economics, I think that's fine. You've got to look at it through the lens of the entrepreneur, not just the worker, because the worker ain't getting a manufacturing job unless that business owner is willing to invest the capital, unless they are willing to take risks. So what's my point? Now we have to ask ourselves, what is the level of uncertainty on a scale of 1 to 10? It sure as hell is not what it was this morning. It sure as hell is not what it was on Monday or on Friday. There's definitely more certainty. Does that mean there's enough certainty, or does that mean that the level of certainty is no longer at a point where it could be the straw that breaks the camel's back as far as a recession? This is something, I think, a very important question we have to ask ourselves. Okay, getting back to Bloomberg. S&P 500 posts biggest reversal since 08. Oh, wow. I would have thought it was the biggest of all time. I'm surprised there was even a close second. So come on, this chart. On this chart, it's only showing an 8.9, but I can't get to can I zoom in here? If you're going to have a dynamic chart, just why not make it usable? I don't know. Anyway, let's just go off what's over here. So today we had a 10.8% reversal. And it looks like, I do just eyeball this here. During the GFC, looks like we probably had, a 12 maybe? Something like that. In the NASDAQ, it has to be the highest by far. But look, even going back to the cerveza sickness, and we never got to this level. We're at 8.8. Really astonishing. Now let's go over to zero hedge because I know they're going to have an interesting take on it. I might not agree with it, but I think it's always worth reading zero hedge. I like the guys over there. Oh, here, but they're touching on this. You see, I don't know if they're looking at it through the angle that I'm looking at it, but look at this, guys. Trump's policy pivot sparks buying panic in everything except 2-year treasuries. Except 2-year treasuries. And I would say 10-year treasuries as well, long into the curve. So I'll just kind of leave that as a teaser because this, I think, is the big, big, big topic. That might be the powder keg that is just completely ready to blow. What an idiot. What a moron. This guy. So this guy, Kevin, why do people listen? Josh, it seems like young people like this guy. Well, why do young people like Kevin O'Leary? Just because he's on Dragon Den or whatever that show's called?
I don't know anyone that does like it.
He's just everything that comes out of his mouth is just pure lunacy. This is the guy that I don't even know where I was. Oh yeah, zero hedge. This is the guy that said that that the Russian citizens were going to revolt and they were going to off Putin, assassinate him. And then he was saying that Putin has dementia. And then, by the way, this is a guy that was big in FTX. And he was telling everyone how great FTX is and Sam Bankman-Fried and all these things. Why do we listen to these? It's like celebrities. It's like, for some reason, the media always goes out there and quotes Brad Pitt or George Clooney or Julia Roberts as far as, what their political views are. These are the dumbest people that we have on the planet Earth. And I've known a lot of actors, a lot of actresses. I've dated actresses. And I can tell you, there is a strong correlation between how good they are at acting and how completely batshit crazy they are. The better they are at acting, the more mentally unsound they are. And when I'm talking about mentally unsound, I'm putting it mildly. I mean, they are completely off the rails. Like they belong in a mental institution. I mean, seriously, most of them are just whacked out on drugs at pretty much all times, right? But yet these are the people that we're trying to get our these are the people that we're putting right in the middle of the intellectual debate. Anyway, I'm sure Kevin O'Leary isn't as bad as Brad Pitt or George Clooney. I'm sure those guys are nice guys. I'm sure it'd be fun to hang out with them and have a beer or whatever. But my goodness gracious, you think you're going to get a take on quantitative easing? Or I mean, come on, what are we doing here? Anyway, okay, let's move on. Okay, come on, let's talk about what's happening in the markets today. Here we go. So headline, Trump pauses reciprocal tariffs for 90 days on every nation except China, and he ratcheted it up on China. The president wrote in his Truth Social, this goes back to rhetoric, based on a lack of respect that China has shown to the world markets. Okay, again, no matter how much you love Trump, who is the guy that's showing a lack of respect to global markets? Is that China or is that Donald Trump? Holy cow. That is the pot calling the kettle black right there. My goodness gracious. Moving on. Conversely, and based on the fact that more than 75 countries have called representatives of the United States, including the Department of Commerce, Treasury, to negotiate a solution to the subjects being discussed in relative trade barriers, blah, 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 cheating, cheating, cheating. I've authorized a 90-day pause. This is nonsense, right? This is him making up an excuse. He has to come to the negotiating table because most likely what's happening is a potential liquidity event. And look, if you're Trump and you're going to the negotiating table, do you bring down the tariffs prior to negotiating? Of course not. Of course not. The tariffs are what brought them to the negotiating table to begin with. That's your leverage. So by lowering them to 10%, that's this is an absolute sign of weakness. Now I like it. I think it was the right move, but let's just be honest here, because if I'm now negotiating with the United States, F you. How about that? I can see, Trump, that, and in fact, I would just base my whole entire negotiation on what China's doing. So if China is escalating, I'm like, yeah, I'll go ahead and just sit back here and see how this plays out. If you don't agree to my terms, Mr. Trump, sorry. Let's just kind of shake hands and part as friends. And, let's just revisit this in 90 days. When the freeze expires, and we'll see how things are going. You brought our tariffs down to 10%, so we'll bring yours down a couple basis points, just as a courtesy. But there is no way that I am negotiating, let's say, the same deal based on this as I would have if all of this market activity and volatility was playing out and Trump is still saying, I don't care what's happening to the markets. I don't care what's happening to the bond markets. I don't care about anything. The house can burn down as far as I care. We are staying true to our objectives, and this is predicated upon these tariffs remaining in place until we negotiate a better deal, not before we negotiate a better deal. Bitcoin also soaring. So here we get into the meat of it, guys. Right here. Here's another clue that I'm going to throw out there for you. Oil spikes. Oil spikes. Growth in inflation expectations spike. What did growth and inflation expectations do over the past 4 or 5 days? Plummet. How does this play into Treasury yields? Or what does this tell you about the move in Treasury yields? More on that in just a moment. China raises tariffs on U.S. goods 84%. We know that. This is more of the rhetoric that I talked about, fight to the end. We discussed that earlier on an earlier live stream. And here is where Zero Hedge starts talking about the basis trade blowing up. And I'm not sure, I can't even see the time frame on this chart. It looks like I'm not sure. It looks probably the past couple of days here. This is S&P futures. They're talking about this basically lining up with the liquidity event, which I would argue is the reason why you saw the upside volatility with Treasury yields. And they say China releases white paper saying it is willing to communicate with U.S. China raises tariffs. Okay. Let's go over to Treasuries, guys, because I think that's the big story here. Wow. Down 6 basis points. So let's just think this through. Let's do a 5-day chart and think this through. So this whole time, we've got massive volatility in the stock market. We have oil collapsing in price. I think today it was down at its lows around $56. 56 bucks. You've got the price of copper collapsing as well. So let's just set aside oil and copper. If you're going to argue that this was all about growth and inflation expectations, right? And now all of a sudden, and this is due to tariffs. So I shouldn't even say growth, inflation expectations due to tariffs. If that's your argument here, and your argument is, well, China is dumping treasuries, why is it that when we have fewer tariffs and we escalate with China, why is it that bond yields go down? Why is that? Right? So if this move up is due to tariffs, when we take off the tariffs, why is it that yields go down if we are escalating with China? Because, one of the main arguments there is China's dumping the treasuries. You see? So I would argue that this move up, like I've said over the past couple of days, had more to do with liquidity and didn't have anything to do with the tariffs. And I think the fact that we don't see much of a move today when you have a massive reversal in the tariffs, whether that move is, up or down, the fact that it's a little down, but it's relatively flat, let's say. This tells you that, in my view, this tells you the extreme moves that we have seen don't really have anything to do with tariffs. At the surface level, they might, but it's really about what's happening under the hood. We go back to the basis trade. We go back to all of these other systemic risks, that could be in the system. And I don't know what's going on, guys. I really don't. All I know is that this is completely and totally bizarre, way more bizarre than what's going on in equity markets. And actually, before we go on here, let's look at oil. $62. So it goes from 56 to 62 in one day. My guess is copper. It's closer there. I don't know if it was up. My guess is it was way up. But oil goes from 56 to 62 in one day. Yet yields are basically flat or slightly down, right? Again, it's the bond market doing the exact opposite of what it should and what you would assume based on what really drives it with growth and inflation expectations. So I think the longer you have this disconnect, the higher the probability that the movement in treasury prices is due to something that's happening in the financial system and or something that's happening in the monetary system. It's very similar to the GFC, where you can sit there at surface level and say, oh, it's mortgage-backed securities. Just like now you could say, oh, it's all about tariffs. But really, was it all about mortgage-backed securities? No, no. It was about the evaporation of collateral, and it was about the fragility of the monetary system. And you just needed one thing to tip it over the edge, that straw that breaks the camel's back, and that happened to be mortgage-backed securities. That happened to be subprime. But if the monetary system was solid, if it was fundamentally sound, if you would have had, let's remember that with mortgage-backed securities or mortgages themselves, the default rate only went from like 2% up to like 5, 6. It's not like the default rate went from 2 to 50%. It was a very relatively small move in the default rate. It's just this whole system was on pins and needles. It was susceptible to this because of the fragility. You're just, you're walking on thin ice. And so is it the fact that, you take that step and fall through, or is it the fact that the ice is thin? So what I'm saying right now is the ice is extremely thin. And the tariffs could have been that step where you plunge through into the water, and that's potentially a systemic crisis. And that's my concern based on what we're seeing here with this completely bizarre move in treasuries. Obviously, I hope I'm wrong. I 100% hope I'm wrong. And there are no certainties. Right now, I mean, maybe it is China dumping. Who knows, right? Maybe they are dumping to try to get back to the United States because they know that would hurt Donald Trump's objectives, because he wants interest rates lower, and they know that would negatively impact the U.S. economy. Maybe, but then you have to ask, why would a country that's desperate for dollars, U.S. dollars, why would they sell their treasuries? And again, the answer is not because they want to, or it's a strategy. It's because they have to, because there's a shortage of dollars, i.e. liquidity. And if that shortage of dollars is impacting China, I can assure you it is impacting entities within the Eurodollar system that are probably even more important to the global monetary system. And like we saw during the GFC, if that goes, then that's going to impact every single country, including the United States. So I think my probabilities, if I had to give that to you right now, is probably, I'd say 75%. 75% that this is some sort of financial system issue and is not due to inflation growth, and is not due to China just selling because they don't like what Trump is doing here. And then the next question becomes, well, okay, even if it is a financial system issue, what does that mean? Can the Fed step in and put a patch over the hole? Maybe. I don't know. I don't know how this plays out, right? I think it's very coincidental that just 2 weeks ago, they floated the idea of setting up a bailout facility for the basis trade, for those hedge funds that were dealing in the basis trade. Maybe they knew something that we didn't, as far as the fragility of the system. And then they get that rate hook from Tyson, which is 10-year treasury yields going up by 40, 50 basis points within the span of a few days. So, can they plug the hole? I don't know. It's going to lead to a lot more volatility if this plays out. And you could have kind of this rolling crisis, right? It's very similar to what we saw during the GFC. In fact, it's like you have the crisis of tariffs this being viewed through the lens of the marketplace. And we kind of get past that. And then a week later, holy crap, there's another crisis. And then you get through that and holy crap, there's another crisis. And then it just gets to the point where it's overwhelming and the whole entire market just completely, takes a dump. So I guess that leads us into the final question of the day that I was talking about at the beginning of this video is what's going to happen with uncertainty? Let's just assume that we can measure this on a scale of 1 to 10. This morning and over the past few days, I would argue uncertainty is almost at a 10. Maybe a 9. We probably had a higher uncertainty during the cerveza sickness. But let's just say it was at a 9. Now, definitely not at a 9. But Trump did a great job of bringing down that uncertainty. But is it at a 1? I don't think so. I would say that it's now down to a 7. Because if it's like taking one of those snow globes. If you sit there and you shake the snow globe like this and then you stop, the snow doesn't all just drop to the bottom. The snow sits there and circulates for another 3 or 4 minutes. And it's the exact same way with uncertainty. Trump, whether you like him or not, whatever, the bottom line is he took the whole damn system, the whole global economy, and just shaking it like this. And then even if you stop, all the decision makers, the important decision makers, right? The investors, the entrepreneurs, the business owners, the people doing the hiring, setting up the factories, and they're still like frozen. Like, whoa. I mean, they've got like PTSD. Like, holy cow. And by the way, I think there's an argument why this could lead to even more uncertainty. I'm not saying that it did, but I think that's a good argument because you just don't know what the hell he's going to do. Like, he has a plan and he comes out with this nice chart in the Rose Garden and everything. And then what? We 5 days later? And now that plan's out the window? And all the tariffs are now down to 10%. Now we got 125% on China. I mean, we're going to wake up tomorrow and there's going to be this and that. And whoa, now we're down to 0% on this country. And now we're up to 50% on that country. And it's just, all I can tell you guys is I think the uncertainty is lower, but I don't think it's going away. And until it goes away, I don't think the volatility in markets decreases. Hopefully the volatility in the bond market decreases. And I don't think, and I think it exacerbates the inputs that would lead to an economic recession. And that's a contraction of aggregate demand. Because whether the tariffs are up or down or whatever, or even if Trump is negotiating deals, that's fine. But what he has shown us is that he's more than willing on a daily basis to just take that snow globe and shake it, or to take that hand grenade and just like, let's see what happens. And I think that's likely going to continue. So for me and I can't tell you guys what to do, but for me and my portfolio, I'm happy to be in T-bills. I'm happy to be in T-bill and chill. I'm happy to be in gold. I'm happy to be in these things that might go down, might lose some purchasing power, but you're going to lose a hell of a lot less, and you're going to have that dry powder to buy things potentially when they're cheaper. Potentially. I'm guessing the well, I'm not even going to throw out that guess. We'll just have to address that on tomorrow's live stream as far as what direction the stock market is going to go. Okay, guys, on that bombshell, Josh, you want to go over and answer some questions on Rumble?
Let's do it. I'll put the link for Rumble right here.
You're going to put a shirt on for the Q&A, or are you just going to... There you go. Nice. You can see we keep it professional here on the Rebel Capitalist channel. All right. If you guys want to head over to Rumble, we'll do a Q&A over there for another 10, 15 minutes. So for all of you on YouTube and Twitter, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism. I'll see you on the next video.